There were over 3.3 million auto loan defaults last year. That is more than during the Great Recession, and approximately 1.73 million vehicles were repossessed, and that is the highest we have seen in over a decade. Guys, I knew it was bad, but I didn't think it was this bad. High car payments are essentially destroying both the auto market and the financial well-being of your average buyer. A recent article from MSN labeled Car Repossessions Return to Great Recession Levels as 1.73 million vehicles are taken back talks about what is going on. Now, this really highlights the financial assault a lot of these high prices have done to your average buyer. That 50,000 average purchase price of a vehicle not only slices up a lot of consumers out of the market, but it puts a massive financial strain on a lot of the people who do buy these overpriced cars. They may be able to afford it early on, but as time passes by, a lot of people can't make these $800, $900, even $1,000 monthly payment, which by the way isn't including insurance, which is also increasing. So these defaults and repossessions are not surprising. A lot of automakers were happy 2024 saw a massive increase in sales, but they're in denial about how much they financially screwed a lot of their buyers. You can sell an overpriced car for a ridiculously high monthly payment and call it a success. But if a bank has to repossess that car in a few months, that shows that that success was just a mirage. But anyways, let's continue with the article. It goes on to say, another alarm bell has started ringing as Cox Automotive has quietly revealed that the repossession rate returned to 2019 levels, while auto loan defaults are higher. 2019 levels were basically pandemic times when people were getting laid off left and right. We aren't even in a recession right now, and even if we were, it is nowhere near pandemic levels. But the repo level has eclipsed even the Great Recession. Automakers with their high car prices have self-induced a recession on their own consumers. No other industry screws over its buyers the way the auto industry does. Talk about short-sightedness. And also, if you look at the loan numbers, they indicate a much worse picture. Because for every car that gets repossessed, there's at least one car that could have gotten repossessed, but the bank decided to give the buyer some leeway. Banks just don't want to deal with repossessions, especially at the current rate. Now, I believe banks are really getting fed up with the car industry because these prices are undermining the banking and loan business. Because the thing is, cars are under the bank's name until they get paid off. Now, banks hate signing off on loans on overpriced cars, but they're even more annoyed with having to deal with repossessions on those same cars a few months later. I'm sure banks are looking at these automakers and thinking, you guys are shooting both yourselves and us in the foot with these insane prices. Now, the banks go along with it because they have their own loan loss provision, so they can deal with this sort of stuff, but they're definitely not happy with all this BS pricing from these greedy automakers. Now, the article continues, digging into the numbers, there were over 2.3 million car loan defaults last year. That's a staggering number, and it even eclipsed those during the peak of the Great Recession. Last year's default rate was 3.13%, which was the highest since 2011. However, that trend started with the Great Recession as the default rate was 3.18 in 2007 and jumped to 3.76% in 2008. So this is nearing the Great Recession levels. It's insane how bad the situation has gotten, quite frankly. I said it before and I'll say it again. Automakers don't care about affordability anymore. They want to play this game of seeing how much they can stretch consumers in an effort to maximize profits in the short term. And they're hoping consumers cut back on other areas to afford $1,000 monthly car payments because that's the only way these car prices can work, because it's not like consumer wages have kept up with the increases in car prices. So these prices just don't work. And no matter how many times the numbers reflect that, the automakers don't care. Instead of leveling with their shareholders and saying, hey, we have to do 10 to 20% price cuts across the board because these prices are not sustainable, they just continue on with this insanity. They prefer this game of high car prices that lead to higher profits in the short run, but inevitably leads to a slowdown in sales, which means dealership lots are full with unsold inventory, which means they refuse to take in any additional inventory, which means they have to then use a lot of their earlier profits to give large incentives to assist these dealers to move units so that they can take in new inventory, and then they just repeat the cycle. Why do all of this when you can just make your cars affordable from the start? It boggles me the mindset of a lot of these automakers after the pandemic era. All their growth plans, their projections for the future are predicated on high prices their consumers can't afford. Anyways, the article continues. It isn't surprising to learn that there was a spike in repossessions last year. An estimated 1.73 million vehicles were taken back in 2024, which was the highest level since 2009. The repossession rate of 2.3% also climbed to levels not seen in years. Just like what I said earlier with repos, they understate how bad the situation is because banks don't want to deal with every customer struggling to make payments by repossessing the vehicle. It's just not feasible. Plus, there's a shortage of repo drivers from what I last heard. So for some banks, even if they wanted to repossess their cars, they can't because they can't find a tow truck driver who's available because they're all busy repoing other vehicles. The automakers have created one big fat mess for everybody. They're running the auto market to the ground with all this greed, and everybody's paying for it. But anyways, that's all I have to say about this issue. Links to the articles are in the description below. Let me know what you guys think about this in the comment section. And as always, if you enjoyed this, make sure to click like and subscribe. See you in the next one.